everyone, guys. Hello, everyone. My name is Afri Nasbat, and I welcome you all in today's session. So, today I'm going to start a very important series for all of you, which is the most important topic. You can say the sure short topics for PPB and IEIFS. So, this is class one. Okay, and in this class one, I'm going to discuss about the PPB's most important topic, which is related and which is actually expected in your examination, because this is actually asked in your previous exam cycle. So all the topics which I'm just picking up in this series is actually related to your previous exam cycles, right? So let's start discussing first of all the bank customer relationship. So all the bank customer relationships are very important when we are talking about the bank and customer relationship, debtor and creditor relationship. So in the normal scenario, in normal circumstances, we have heard that bank is a creditor and the customer is a debtor, because bank is giving loan to the customer. But if we talk about this bank customer relationship, there can be a vice versa relationship. Means bank can also act as a debtor and creditor, whereas the customer can also act as a debtor or a creditor. Now, for what? If we talk about the bank customer relationship, when, for example, there is a customer, right? And if a customer is depositing money in his saving or current account to bank, right? When a customer is depositing money in his saving or current account to the bank, okay? So, customer is depositing money. So, in this case, the money is actually due on bank. So in this case, bank is actually acting as a debtor, okay, and customer is actually acting as a creditor. Okay, customer is a creditor and bank is a debtor, in which when the customer deposits money in the bank, and when customer has actually borrowed some loan from the bank. Now, in this condition, the loan amount is actually due on the customer. And that's why, in this case, customer is acting as a debtor and bank is acting as a creditor. Clear? Now, next, if we talk about bailers and bailee concept. So, in bailers and bailee concept, customer is a bailer and bank is a bailee. Now, what is bailer bailee? Before this, let's talk about what is the contract of bailment. Contract of bailment means when there is the delivery of the goods from one person to another person for carrying out some specific purpose, that is known as bailment. For example, I'm leaving to USA tomorrow. I have some very good car with me. I want to ensure the safety of that car. And I have delivered that car to a garage for the safety of my car. So this is the contract of payment, where I have delivered goods to that garage for the safety of that good, right? And because I am delivering goods to garage, so I am bailer. And garage is the bailee, the one who received the good. In case of bank, bank is always acting as a bailee, the one who receives the good, and customer is acting as a bailer, the one who gives the good. Why? Because when the customer deposit their certain valuable items like bonds and securities and documents to the bank for their safety and custody. Okay, so in this condition, customer is actually acting as a bailer, the one who delivers the good, like bonds and securities and documents for the safe custody, right? And bank is acting as a bailee, the one who received the goods. Okay, so customer is acting as a bailer and bank is acting as a bailee, right? In bailer bailee relationship or concept. Okay, next, agent principal relationship. Now, agent is actually a person who is working on the behalf of principal. So principal is the one who is giving instruction to the agent that you have to perform this certain function on my behalf. Okay, so bank is a agent and customer is a principal. How? Because see, when a bank is concerned, so bank is actually doing functions on the behalf of their customer. For example, customer is giving access to the bank that please submit my insurance premium. Please submit my bills regularly, electricity bill, phones bill, insurance premium, club fees. So these were the fees which were submitted by the bank on the behalf of the customer. So because bank is following the instruction of the customer, so bank is an agent and customer is the principal. Vice versa is not true. Next is the lesser lessee concept. Now, lesser lessee concept. In lesser lessee concept, bank is actually as a act as a lesser and customer is actually acting as a lessee. Bank is a lesser and customer is a lessee. How bank is a lesser and customer is a lessee? See, when bank is giving or bank has certain lockers, okay? So bank actually do what? Bank actually gives that locker on a lease to the customer for the safety of their jewelries and precious stones, etc. Right? So bank is giving that locker to the customer. So bank is giving, so bank is the lessor. And customer in this case is a lease, right? So bank, if we talk about the creditor and debtor here, vice versa is true. Bank act as a debtor and customer act as a creditor, in which case when a customer deposits his or her money into the current or saving accounts or FDs, right? When customer is acting as a debtor, it means that the customer has borrowed loan from the bank. Okay. Vice versa here is true. Bailor Bailey concept, customer is actually a bailer. Okay, and bank is actually a bailey. In which condition? When the customer is depositing certain valuable items like property, papers, document for the safety of that. Right? So this is the customer who is the bailer and bank is a bailey. Vice versa here is not true. Now, in the lesser lessee concept, customer is actually a lessee, the one who receives, and bank is actually a lessor, the one who gives, right? So, bank actually gives that locker space on a rent, okay, to the customer. Bank actually give that locker on a lease, okay, to the customer. So, in this case, bank is giving, so bank is a lessor and customer is a lease, right? Now, agent to principal, always remember bank act as an agent who is working on the behalf of the principal. So, principal is the customer. That clear? Now, next, this stages of money laundering, again an important thing, right? So, stages of money laundering is important for you all. Now, what are the stages of money laundering? So, there are basically three major stages of the money laundering. Okay, so first is the placement, second is the layering, and third is the integration. So if we talk about this, okay, first there is a person, see this person is just earning some dirty money. Dirty money, like for example, they are earning money from any illegal activity, drug trafficking, or anything, right? Now, from any criminal activity, they just earned money. Now, this first is they infused this money into the financial system of economy. They infused this money into the financial system of the economy, assuming or representing it as it is actually a legal money. So, placing the dirty money in the financial system of the economy by opening different accounts in different banks, that is known as the placement. Now, after placing it into the different account or in accounts, it is layered. Means, first of all, to hide the source of this money, they just layered these transactions with good transactions or the normal transactions. Or they just move money into the different bank accounts so as to avoid the sources of this money. That is known as layered. And integration means what? Now, integration means they just collect money from all the accounts and then utilizing this money for some legal purpose, like purchasing of any asset or house or property or starting some legal business. Now the money has been placed successfully. So this is known as the stages of money laundering. This is known as what? The stages of money laundering, right? So first, the money is actually derived from criminal activity. Now this money is actually placed into the financial system by opening different account, that is known as placement. Now after placement, this is layered with some good transaction. This is layered with what? This is layered with some good transaction. Okay. Or the money is actually moved into different bank accounts. That is layering. And finally, the integration, all the money has been integrated, then it is utilized for what? For acquiring some asset. That is known as integration. So there is placement, there is layering, and there is integration. Clear? Done? Now next. Next is the anti-money laundering framework in India, again, which is a very important topic. Again, you will get question from this anti-money laundering or AML framework in India. Okay. So, first of all, it is the FATF, Financial Action Task Force, okay, which is responsible for what? For just enacting laws for the prevention of money laundering all over the world. And based on the recommendation of FATF, India also have this Prevention of Money Laundering Act 2002, in which there are different institutional framework which every bank has to follow for preventing this money laundering crimes. Like first of all, there is Financial Intelligence Unit India, which has been actually set up for receiving information from different type of banks and financial institutions. So if a banker has any suspicious activity, see any suspicious activity, if they have doubt in any account, so the details of that account and financial transactions is actually sent to Financial Intelligence Unit India, FIU India, right? Now next. Next is the Enforcement Directorate. So Enforcement Directorate is actually responsible for investigating and prosecuting the money laundering crimes. Right. So if the investigation is done or if the prosecuting is done for any money laundering crimes, okay, then it is actually done by the Enforcement Directorate. Then there are special courts. Special courts, these are actually meant for the what for the judgment in the case of the money laundering. So investigation is done by the Enforcement Directorate, judgment is passed by the special courts, and they also have the power to seize the asset if they think it is related to the money laundering. And lastly, there are regulators of the various business activities which are covered under the Prevention of Money Laundering Act, which have to follow all the instructions and guidelines of how to prevent or discharge their obligations under the Prevention of Money Laundering Act or Prevention of Money Laundering regulations. Right? So we have Financial Intelligence Unit India, we have Enforcement Directorate, we have a special courts, and we have the regulators. Clear? Done? Now, next, if we talk about the money laundering offenses, again, this is very important. Money laundering offenses. So, there are two offenses under the PMLA Act. First of all, Section 45 of PMLA Act defined its act as an cognizable and non-bailable offense. Cognizable and non-bailable offense means that it is actually you can just get arrested without any arrest warrant, that is cognizable, and you will not get bail in this money laundering business, right? So cognizable and non-bailable offense, section 45. Section 4 actually defines the punishment. So if you are involved in the case of money laundering, there is a very rigorous punishment. And the punishment is not less than 3 years in the jail, and it is up to the maximum of 7 years. In some cases, it can be extended to 10 years also. This is section 4 and 45 of money laundering offenses, right? Now, next thing is obligations. Now, what are the obligations under this Prevention of Money Laundering Act? First of all, every bank has to verify the identity of the customer. Officially valid documents should be presented for the authentication and the verification of every customer. Second, they have to maintain the record of all transaction. Every bank need to maintain the record of all the transaction for the period of 5 years from the date of the transaction. So if the transaction is done today, from today till the period of 5 years, from today till the period of 5 years, they have to maintain the record of all the transactions, right? And lastly, they have to maintain the records of identity also. So whatever the records they have collected for the KYC purpose, they have to maintain the record of this KYC purpose for a period of 5 years from the date of the closure of the account. Right. So this is three obligations under the Prevention of Money Laundering Act. Clear? Okay. So this is the most important topic for today's class, everyone. So thank you so much everyone for watching this video, first of all. And second, because you all know that we are starting with fresh batches, and we have a lot of batches coming up. So we have foundation success batch, yes, but we are coming up with the selection batches. We have coming up, or we have planned for you the MCQs batches. We have planned for you the crash batches, the crackers batch, everything, right? Capsule batch, marathon batch. And you don't have to enroll in each and every batch specifically. Either just please go and enroll yourself in the JIP Super Elite All-in-One Plan. When you are just going in the JIP Super Elite All-in-One Plan, you will get the access of all the live classes, mock tests, and notes under one roof. Okay. And on the occasion of Shivratri, we have a very good discount that is going on, which is flat 52% off. So if you are going to use this code SHIP, you will get a flat 52% off on the JIP and CIB Super Elite All-in-One subscription. So everyone, go and enroll yourself now. Thank you so much for watching this session. I hope that everything is clear. And if you have learned whatever I have told you, just please subscribe to this channel and press the bell notification icon. Thank you so much, everyone. Thank you so much, guys. Take care. Bye bye, everyone. Bye, guys. Everyone. Take care. Bye.